back in the live sessions of Future Summit, and we're super excited to have with us Linda Zeilina, CEO and founder of the International Sustainable Finance Center. It has a very long name, but I'm sure we'll get to understand a bit more what they do in the coming minutes. Before that, let's just go through what happened today and what happens today again. We had two sessions, the live courses, the second part of Introduction to Sustainability and Introduction to Foresight. And then from 12:30, we have a session with Mircea Iliescu from the University of Cambridge to talk about how we design babies or not in the future. We go to Athens later on to talk about assistive technology, in particular tech for blind. And then from 6:30, sustainable business making, and from 7:30, sustainable finance in Romania. In the same time, what happens tomorrow, it's also a very interesting day. We have the final part of the Introduction to Sustainability. We have the first part of the Introduction to Innovation and New Innovation class. We meet with Tanya Schindler on how to use foresight in business. We talk about risk education and a special half of the summit event from 2 to 7. You have the pitches from our Future Makers Incubator from 6 countries, nobody from the Czech Republic, but I'm sure next year we'll get to that as well. Now, coming back to what we do and where we are and with whom we are, I think it's quite obvious why we're here and what's the purpose of the conversation. But let me briefly tell you who Linda is, besides running the International Sustainable Finance Center in Prague, London, and basically all over the world. She's a fellow of the Royal Society for Arts, a member of Agora Energiewende, or I'm not sure if I pronounce it properly, a Council on Sustainable Finance, and until recently a policy leader fellow at the EUI in Florence. Linda has been honored with many distinctions, but two of them, the new security leader from the also Security Forum, and the future European leader by the Prague European Summit. Linda, welcome to Future Summit. Very happy to have you with us.
Thank you so much, Cyprian, for inviting me this year. I'm very excited to be with you. As Great. You've mentioned, I do have multiple hats in the sense that we try to maintain a global outlook, but the ISFC, which stands for that very long name, International Sustainable Finance Center, is actually located in Prague, so we are very regional. I have prepared a short presentation that I will launch now so that you can follow it a bit easier.
Lovely. So let's put it on screen. We have it on screen now.
Fantastic. So today, I will quickly tell you about who we are, and then we're going to dig deeper into the subject matter that we're trying to cover today. So who are we? I'm the CEO and founder of ISFC, as Cyprian mentioned. So the center was set up in 2020 during the global pandemic, because the year before we identified a large gap in terms of expertise and capacity to work on sustainable finance. And sustainable finance is essentially finance. There's nothing that different about it. It's just finance that should be able to work in the long term and integrate different things that maybe before that we didn't see or didn't understand fully. So the center was built on 3 pillars, predominantly on generating knowledge and creating solutions. That is our research arm. However, the second pillar is also to build capacity and understanding all across the Central and Eastern European region. I'm Latvian, so I guess I have a natural passion for these topics. Third pillar is convening and connecting. So we want to connect people who are like-minded. However, we also want to work with skeptics. We want people to understand why this is a mega trend or a thing that will be very important going forward. And fourth, least but not last, we also help to operationalize EU's Green Deal and the different climate ambitions and regulations so that you can understand easier what do they mean in practice. So today, what we're going to cover very briefly, and then we can dig deeper during the conversation in terms of questions and remarks. Number one, we will look at why sustainable finance is here to stay. What are the changes in expectations and priorities? What has changed over the last few years or even a decade? Second, why does it even matter? What is changing in this post-COP26 world? I'm sure all of you have seen all the headlines saying, oh, well, it achieved something, but maybe not enough. Are we on the right course? Do we have enough pledges? How is it going to be operationalized? So I can actually tell you a bit more about what happened at COP because I was there for most of it. And thirdly, what to expect and how to actually work around this. So how can you take advantage of these changes in expectations, in how finance operates, or what the priorities of the financial sector are? So to start us off, the change. So what is actually changing? Because we talk about change a lot, but change is actually often underestimated at its speed and sometimes even overestimated. So we sit at a very interesting place in time and space. Currently, what is changing, or at least we're seeing the start of it, is that we are getting a new generation of asset owners. These are people who actually hold money and assets, people who invest, or people who inherit some stakes in different types of funds and asset management institutions. This means that these people will have millennial generation or whatever you want to call it. It's probably some of them are even younger than millennials. They have different expectations of what they want to do with their money. Of course, return is still very important. Let's not be naive about it. However, there's also other expectations that arise about responsibility, about how they want their money to be invested. Second is greater transparency. People expect to know a lot more about business and about their investors. So they want to know how the money is invested, who's doing what, and have a better understanding of it. And the third one that ties it all together is the responsibility towards environment and society. As people create their own social bubbles, there is a much bigger expectation from the social bubbles to act more responsibly. I'm sure many of you have heard about the flight shaming in Sweden. It's not just in Sweden, it's becoming quite a global phenomena amongst wealthier cohorts of society, but also about the expectations in consumer behavior, and also it ties into the investment behavior. Secondly, policy. Policy is a major driver, especially in Europe. The EU Sustainable Finance Agenda and taxonomy, those are really, really big changes. These are world-leading policies that do shape how markets behave. This is just the start. Again, we have the taxonomy that is related to sustainable activities, sustainable economic activities. However, we will also have a social taxonomy. So that means that the scope of sustainability is expanding. Number two, supervisory authorities. Banks and supervisors are really trying to figure out what information they need to mitigate the risks that arise from this shift in policy, or even in shift of different types of businesses changing their models or trying to minimize their risk. All of that is reflected in the financial system. And if you're a central bank, you really need to manage any kind of upheaval because your mandate is to manage financial stability. Third one, reporting requirements. So this is also a big change. We will have the European single access point, which will allow investors and other market participants to have all the information in one place. This is linked to SFDR. We have a lot of acronyms in this space, by the way. The Sustainable Finance Disclosure Regulation, sorry, and the CSRD, which is the Corporate Sustainability Disclosures. So it's very important that businesses currently, these are 500 employees and plus, will have to report. However, over the time, it will change. We already are talking about adding companies with 250 and more employees. And the expectation is that at one point, sooner or later, this will also apply to SMEs or small and medium-sized enterprises. And third, last but not least, we have risk. We have climate stress tests in banks and also in a lot of investment funds, trying to understand which are the riskier parts of their portfolios. This might impact lending because you don't want to lend to somebody who might not be able to repay. You also don't want to invest in something that might become, you might have heard the term, a stranded asset. So you invest, but then you're unable to sell the business. Second one, improved risk modeling and use of additional metrics. These models are constantly getting improved. We are so much better at managing complexity than we ever have been. Also, we have a lot more academic research that is getting money and attention trying to understand how the complex systems work together. So, for example, how does biodiversity impact business models or their ability to deliver on the risk and return metrics? And then thirdly, greater use of data and science. As I mentioned, because of academia leading the way, we also have IPCC reports and other evidence, science-based evidence, that helps us understand better the linkages and causes. This, for the financial market, is incredibly important because what it helps to understand is how to correctly price risk. Currently, we have a big issue of pricing. We don't price in externalities, but we also don't correctly price in risk because in most cases, the risk is invisible. And the greater understanding of the non-financial risk is actually starting to slowly but surely change the market prices. So why does it matter? Well, it matters because a lot of capital is looking for investment opportunities. So if you are a business owner who is trying to figure out how to scale up or how to do things better, well, this is a golden opportunity. Years of quantitative easing have created a lot of liquidity. So we have a lot of money looking for opportunity where to go. Often the issue is small ticket size. So if you're a small investment, it might be a bit harder for a big investor to invest. However, over the last few years, we have also seen smaller funds coming up where investors are happy to go for something a little bit riskier. However, if it is green, as you see in point 2, that is a big selling point. Because the real economy currently does not have enough investment opportunities that are aligned with the EU's taxonomy and proper solid ESG, environmental, social, and governance criteria. These are growing funds, growing investor interest into these particular opportunities. So if you can show that you fit in very well with that narrative, you fit the box for green or responsible or ESG aligned, then immediately the interest is peaked because the makeup of our economy means that a lot of current businesses are not aligned. The EU is, of course, leading the charge. So anyone sitting in the EU is in a good space. There's unprecedented interest in sustainability, combined also, of course, because of the sustainability legislation. But when we started the ISFC in mid-2020, we had to explain to businesses and financial sector participants what ESG was. So in Central and Eastern Europe, we actually struggled to help people understand what is ESG, what is taxonomy, what are all these sustainability or sustainable finance agenda parts. And the interesting thing is, over the last 6 months, we have seen unprecedented interest. Of course, it's led by compliance and legislation and regulation. However, it is also led by the interest from the investor side. Because impact and externalities.
I'm sorry to interrupt you, but
Sure.
I have a question so that I don't forget. You said that in the past 6 months, 1 year, let's say,
Yes.
interest of companies has grown, etc. Also due to the interest of investors. But why has the interest of investors gone up?
Well, that's exactly why last point, actually. So it's because of impact. So in Central Eastern Europe, the starting point is very different. We are not as close to the technological frontier. We don't already have all the solutions lined up. So currently we have very, very real problems with just transition in coal regions, problems with our energy mix in a lot of countries. I mean, sitting in Prague, coal is still a point of conversation. It's the same in Poland, and I believe even Romania has a few coal issues to still discuss. But secondly, also our industrial base is heavy emitters. So these are quite industrialized economies. So that means that if you can show impact, if you can invest money into something that shows that over the next 5 years you have cut X amount of emissions, that already is interesting. So for any impact investor, it's a safe environment because you are still within the EU. It is not as volatile or not as risky as an emerging market where you might not be able to speak the language. It's not in the single market, so on and so forth. So there's a few aspects of risk that immediately drop away. And also you can show positive impact. The main obstacle, as we will see in the next one, is actually not very many businesses know how to tell the story. Number two, a lot of businesses don't report, and reporting and data will become the big question in the next decade. Everyone will be working on it. So that means that if you can actually create reporting, so an annual report that includes also non-financial aspects such as emissions, your social impact, environmental impact, and also governance. In this region, what we discovered quite quickly was that governance is not really properly developed. It will really matter. If you can show that you're the best governed, you really line up really well with environmental impact. For example, if you're a heavy emitter, you have a transition plan with KPIs, with everything, that immediately is super popular because there's not that many doing it now. A lot of companies are talking the talk, they're trying to figure out how to get started, but they're mostly talking the talk. So that is a real problem. So this is why we've actually created this slide, is how do you take advantage of this? Because in a lot of cases, I find that both businesses and startups in the region really struggle with it. It's very abstract, all this decarbonization and sustainability, greening, so on and so forth. So number one, we do genuinely believe that there's a great momentum for meeting investor needs. In the region, you really can show some positive impact because the starting point is different from already very advanced economies. So you can craft the right story that the investors want to hear, and you can, through that, create a bit of an edge because you can show that the impact of this investment in terms of positive social environmental one can be larger. Number two, reporting definitely offers an opportunity. As I mentioned, most startups and even large businesses are still very bad at data gathering and reporting on their operations. Usually it is done pretty much status quo, put it in a nice PDF, and that's sustainability report. Well, actually figuring out how to gather data better is very, very important. Third one that we've noticed, anything tech related is super hot. Everybody wants to invest in it. There's a real interest in high tech or any kind of technology that fits in nicely with the idea that we will innovate our way out of the climate crisis. So innovation is also a big focus for the European Investment Bank, but not only. It is a really big pillar for also the EU going forward. So the idea is that we need to figure out new solutions. A lot of systems change. We really need to get better at it. Then another interesting thing that we have noticed emerging is the dematerialization of the economy. That ties in with the big conversation about degrowth or the planetary limits. So how much of these resources can keep using? And that's why there's a big conversation around circularity. So if you can show that your business models or whatever innovations you're coming up with are actually contributing to circularity, that is in very, very high demand, because somehow most businesses don't think this through properly. So it's the life cycle that you need to look at. It's not enough anymore to just create a product and not really have a think about all these different scopes and life cycles. And then last but not least, supply chains. This is going to be another massive topic of conversation, both because of COVID and because of the disruption in supply chains that we saw, but also because there is a real impact that hides in the supply chain. So for big business that needs to then report to their investors and pretty much to their consumer base and so on and so forth, it is a real PR reputational risk if there's a big danger hiding in supply chain. And if you can swap a supply chain element to something that's greener, something that's socially more positive, that is incredibly popular. It's very important to also, when you're telling that story about your business, to show how do you fit in within the wider system, these mega trends, but also if you are planning to become embedded into the supply chains, it is very powerful to show how that actually contributes to improved outcomes. So that's pretty much all from me. I'm very happy to take questions and discuss further, because this was a very quick bird's eye view of what we work on and how it works.
I have a question from somebody that is actually related to cost. And this is one of the questions that I think we need to ask more and more to become sustainable, or to you have a business, small or big, doesn't really matter, to become more sustainable, not just for the sake of your employees, customers, but also investors. You need to spend. So where do you see this new type of capital coming from? Transformational capital, let's call it.
Well, I think what I've noticed in the region is, so I've worked in the Nordics a lot, and it's very interesting to compare how people look at these things differently. So currently, there's quite a lot of things you can do for free. Number one is big self-promotion. So number one, you will need to go and meet as many people as you can. If you're starting a business, meeting people, connecting is super important. So proactively find events, find different opportunities to speak, to be seen, to attend, potentially even write. So another thing that is very important is to actually tell that positive story in the media. The media is constantly on the lookout for something interesting, whether it's clickbait or whether it's a deeper dive of a success story from the region. Those are very popular things. What I find is a lot of passive attitude, going for pretty much incubators and pretty much the obvious solutions that you can find as a startup. And there's too little thinking outside the box, which to me is a very interesting thing. If you're an innovator, if you're starting a new, let's say, disruptive business, then you also need to think outside the box. How can you do the PR cheaply? In terms of small investments to help you with that, I think there's plenty of opportunity. But again, it will take time to sit and sift through them. From climate kick programs, there's quite a lot of them, small grants, bigger grants. There are also a lot of philanthropic institutions that are underutilized, that are looking for social businesses. So again, it goes back to reporting. If you can tell the story, listen, I'm a socially responsible business, I just need this leg up, that might work. But that is, again, developing your brand and trying to tell the positive story.
You mentioned a couple of minutes ago about the fact that this non-financial reporting, but also an increased pressure, regulatory pressure, is also coming for SMEs. So not just for large companies or corporates. Is there an estimate that you look at? Is this a 5-year perspective, or is this a 2-year perspective? When do we need to how fast do we need to get ready? That's the question.
Well, that's an interesting question. I just came back from a business trip last week to a couple of central banks that have just realized that SMEs are their biggest problem because there's no data. I would expect first moves in a couple of years, not much earlier, but once it starts biting, it will bite. So, and the problem is usually people think, oh, well, I'll do it closer to the time. But actually, it's much more expensive to do it closer to the time and much harder. So I would suggest trying to figure out and tie it into strategy and day-to-day work earlier rather than later. Because we've had plenty of occasions when people have asked the question, but once they decide, it's already very expensive because the time frame has completely shrunk.
Yeah, yeah. You also talked about stranded assets, and a lot of businesses still invest in these type of stranded assets. So, what, in your view, what are the most risky stranded assets that you still see people investing in, or even starting new businesses?
Well, the main issue is that, as I mentioned earlier, the real economy is what it is. So you need to still invest somewhere, right? So if the returns are decent enough, you will still take the risk because you can't find enough other opportunities. It's much easier to say than do in terms of green investing. I think that a lot of the oil and gas operations in Europe will be very pricey going forward. So you already see that in the news, Royal Dutch Shell moving to the UK to try and improve its dividend payments. So these things are very real. It's going to bite. Also, things that are very non-circular and very heavily reliant on plastics. Those kind of things also might incur some sort of tax or externality pricing going forward. I mean, people still invest in it because it is also a little bit of a group think. So people think that, oh, well, I will time it correctly, I will get out in time. And that's something that investors do all the time because there's a real safety in numbers. If you have thousands investing in a particular business, then, ah, well, you know, it surely will be okay. But we've seen plenty of occasions when it hasn't been okay. So I think that's also starting to materialize. We have much better data going forward. We have better academic research. So these things will start changing sooner or later.
Yeah. In the same time, when you look at businesses and startups in Central and Eastern Europe, um, besides the the European new funds, let's call them the resilience mechanism, there's also an increased impact investment and sustainable investment um, perspective. What would you recommend to a startup from the Czech Republic to Romania to Serbia? Where should they look for money, and not just from a EU perspective, especially for those Serbia or Albania? Where would how would you do it? Where would you start looking for money and finance?
Well, it's a very good question. We call it the different tier system. So number one is understanding your own universe, which starts within the country level. Are there any funds that are quite visionary? So venture capital, impact investment funds, so on and so forth. Number two, understand your stakeholders. So stakeholder mapping, I know that NGOs and civil sector and some financial entities do it. It's relevant for everyone. You need to understand who you need to know, also on a personal level, right? It really matters. It makes a huge change if somebody can recommend you to somebody to open that door and start that conversation. Number two, within Europe, again, understand which ones have a bigger exposure to see which ones are interested. There are also smaller funds that allocate maybe not a huge amount, but they might have better terms. So, for example, angel investors or family funds. And then on a final tier, don't just think small, think big. Think about
Yeah.
US funds, think about global funds. Look at the conferences, right? So there's multiple impact investment conferences that actually allow startups and small businesses to pitch.
Yeah,
So
you also
join
have
that.
a summit that takes place. You said in May next year. So for those of you that watch now, and especially those that will watch later, we have a lot of participants from the US and especially Latin America that will probably watch this later. There's a lot of things happening in Europe and in particular in CEE. And I think we are the new market, and we are part of the future, perhaps even stronger than some traditional economies where circularity is significantly more present, or sustainable business making. We are a very fertile land also because it's a very empty land to some
Exactly.
extent. Plus, we have so much coal on our hands that it would be cool to get rid of eventually. We also have another or other sessions today about sustainable finance and sustainable investments and sustainable business making, and some other sessions in the week about sustainable food, plant food, and not only. I would like to thank Linda very, very much for taking the time to be with us today. And I hope we all get to live a more sustainable, fair, and circular future in the end. In the meantime, we take a break and we come back with a geneticist from University of Cambridge. Since we talked about the future, let's see what the genes have to tell us, from designing babies to redesigning the way we live, eat, and work in the same time. Thank you so much, and have a lovely afternoon, everyone.